Robschild here. No investment advice. Welcome to the show where we view financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Wednesday, February 19th, 2025. Today's episode, I don't really have any news to share other than that the next big report, again, is not until Friday, February 28th, where we get the PCE data, not this Friday, but the following Friday. So any major changes in markets may occur mostly because of news. There's not really much big economic data coming out until the following Friday. No major changes in the daily reminders. Watch macro update to 11:25 to hear me explain this extremely important information. Also, no major changes in the crystal ball ratings nor the Robschild portfolio. Watch portfolio update to 11:25 to hear me explain that. Let's dive straight into the charts, starting, of course, as always, with the S&P 500, the SPX. I've been noting I don't think we're going to get above this 6,100 level. Well, guys, today we are clearly closed solidly above any previous candle, closing at an all-time high in the S&P 500. This is currently a bullish sign, and many chartists are looking to reach up to this previous trend line that we had up to around the 6,300 level. This trend line comes from many tops of this previous sort of megaphone pattern that we had been developing here, going back to, starting in March, end of March 2024, hitting it again in July and a few more times. So that's the next big psychological resistance point. Will we get there? It's not guaranteed, but if we do get there, it will certainly act as a point of resistance. Whether we get there or not is hard to say. I'm going to bring up marketinOut.com's chart of the advanced decline line. Today this is today's candle here on the right side. This does update on a daily basis. This is the all-time closing high, and yet the advanced decline line is not as high as where it was back in December, although it is starting to get to the top of this previous range. And so we could see more strength coming into the advanced decline line. What we don't want to see is the price to continue higher while the advanced decline line stays muted. In other words, goes flat or even goes down while the price is going up. That would mean, the price of the S&P 500 is clearly getting overextended and would send it back down. Anyway, this is something, again, I've recently added to something I check on a daily basis and something I see as important to monitor. Again, this represents the breadth of the market, how many of the stocks in the S&P 500 are participating in this whole going up thing. Is it just, NVIDIA because it, what is it, 10% of the entire S&P 500? Maybe not that big, but you get the point. I want to bring up junk bond credit spreads again. Again, this is how much people have to pay, over the treasury rate. Treasury rates are guaranteed. You lend your money to the government, it's guaranteed to come back with some interest. If you lend it to your neighbor's dog, you're probably going to want a little bit more money than what you can get from the government, right? So sometimes, again, this can be as different as a 20. Sometimes the market needs 20% higher, and not 20% of the percent, but 20%. Like if the yield's 4% on a 10-year treasury, to get a junk bond, you would 10-year junk bond, you'd need 24% interest payments. That's how this works, by the way. It's very significant. That was an extreme time when junk bonds were an extremely undervalued, super cheap. Great time to buy junk bonds, by the way, when you see the spreads get this wide, because usually that means, Mr. Market has been going the other direction and down the highway instead of going 100 miles an hour down the highway the wrong way. He's now driving backwards down the highway 100 miles an hour when junk bonds get this cheap. Anyway, I digress. But a normal range throughout history is typically between 3 to 6%, I would say, most of the time. And again, right now, specifically today, we're at historic lows in how much more people expect to get from junk credit. It's called junk credit because it's not considered to be investment grade. It's not investable. You don't buy junk bonds because you think it's a good investment. And so it should have a higher yield. It should have a significantly higher yield, not just 3% yield or less. And so this is just a telltale sign that the market is getting unbelievably complacent here, willing to lend their money to the neighbor's dog for just a little bit more than what you can get for the treasury. Yeah, well, the amount of risk that you're taking constitutes a much higher return than what you can get on a treasury, than only 3% more than what you can get on a treasury. Even AA bonds, these are considered pristine bonds that just yield a little bit more because they can go bankrupt, but they typically would never happen. Sometimes the spread can, again, in the great financial crisis, can get almost as high as 5%. And today we're at an abnormally low level of 0.44%. This is like historically low credit spreads, even with corporate investment grade bonds. No other charts really caught my eye all that much today that differed from yesterday, so there's not much reason to talk about them. The one that is astounding me the most, we'll say, is actually Bitcoin continuing to be, let's zoom in so you can really see this. These 4 dojis in a row, 4 days in a row, staying in the tightest range I think I've ever seen Bitcoin for the longest period of time. Can you believe this? We're within maybe $100, $50, $100, something like that, for 4 straight days. And today closing exactly at that same price that these dojis were fighting at. Such a huge fight zone, again, in the very middle of this parallel channel here. And as I've said in shows, because of the length of and tightness of this happening, every day that passes that we're still in this range gives me more confidence that we are preparing for a big move in Bitcoin. And I don't know if it's up or down. It really could be either. My crystal ball would say down, considering how far we are above moving averages. Even Lynn Alden, who's been one of the biggest bulls in Bitcoin for a long time, is saying, be careful here. She uses certain metrics measuring how liquidity generally correlates to Bitcoin, and says Bitcoin's actually above that range. So there are times when it's more clear that it's a good time to buy Bitcoin, and now is not really one of those times. So I am expecting it to roll over here. If you've been watching the show, you know that I think there's an enormous amount of bubble-like markets, and this is included. So from a charting standpoint, yeah, we can, as big as bubbles seem, bubbles can always get bigger, and I have no idea how big this bubble is going to get before it inevitably must pop. All bubbles pop, by the way. You don't have bubbles that just keep going up forever. It doesn't happen. It never happens. It can't happen. Because at the end of the day, eventually people are going to want their dollars back so they can buy stuff and pay off their debt and pay off their interest. And, and when bubbles, the biggest unfortunate thing is with bubbles is people think they have so much wealth. They look at their accounts, they look at how much their Bitcoin is worth, they feel so rich, and then you take that away. The higher it goes, the further that it can fall to get to a normal range. And when that occurs, the wealth stripping effect can, that's 1929. That's what caused, that's the Great Depression, by the way, in which stock prices did not get back to their same price for decades. Never mind the amount of purchasing power lost for something around, I think it's over 3 decades, if I remember correctly. But that's all for today. That's all from me and my crystal ball. Hope you enjoyed. Thank you for watching. See you next time. Rob's Child.